So we haven't heard from Michael Saylor in quite some time. He went on Twitter Spaces and came out answering what currently is going on in the Bitcoin and crypto markets. I thought it would be of interest to many of you out there. So I wanted to bring it to you and publish it. As always, subscribe, thumb up the video, and leave a comment. Let me know your thoughts on Michael's words. I'm just going to leave it to Michael and just let him go the whole time. Peace.
Whether this is just traders trading or if we're truly seeing a flight to safety here and Bitcoin finally acting as the store of value that we've all expected.
Yeah, good question. I think it's worthwhile just to think of this and everything that's happened in the past year. And I think you could summarize this as there has been a crisis of confidence in the crypto industry, a micro crisis of confidence in the industry that is about 1% of the world's money. And now there is a second act, which is a mainstream crisis of confidence in traditional financial assets that is all the world's money. So you think about crypto as a couple of $1 trillion, and the world's got $500 trillion of financial assets or more. Roll the clock back 12 months and we'll just rifle through what's happened. This is, of course, my perspective, but one, we start with a crisis of confidence in crypto derivatives, and I call it Terra Luna complex. That was a very complex derivative constructed, and it crashes. Two, you have a crisis of confidence in crypto banks like BlockFi and Celsius. People find out that maybe they're riskier than they thought they were, and they melt down. Three, there's a crisis of confidence in crypto hedge funds like Three Arrows. First Three Arrows, eventually Alameda. And we think these geniuses that are smartest guys in the room aren't so smart anymore. Four, there's a crisis of confidence in crypto trading operations, OTC desk like Genesis. And people that are in the business of borrowing and lending out or rehypothecating Bitcoin or other crypto assets find themselves again on the wrong side of these trades, and they're wiped out. Five, there's a crisis of confidence in crypto exchanges. FTX is the most notable example of a meltdown, but generally there's just been massive pressure coming from the regulators on all the crypto exchanges, and we see the pressure placed on Coinbase, the pressure placed on Binance, et cetera, and that's created concerns, uncertainty. Six, crisis of confidence in crypto staking. You saw the SEC action against Kraken and the ETH staking pool, and Gensler has said staking is a security, and so there's a question of where does that sit? Seven, there's a crisis of confidence in crypto securities. Anything based on a proof of stake token. If you've got a set of founders that are economically interested, that have an excessive amount of either economic interest or governance control that's undisclosed, that is a risky place to be. There's crisis of confidence there. Eight, this crisis of confidence in crypto settlement networks. Silvergate and Signature were the two major mainstream settlement networks. When Silvergate fails and Signature gets shut down, the question is, how do we settle on fiat rails? Big question mark. Nine, crisis of confidence in cryptocurrencies. And here I refer to stable coins like BUSD. Obviously we see what happened there. It gets attacked. Custodia gets blocked. Circle, has the mishap with Silicon Valley Bank. Tether has been under pressure. 10, crisis of confidence in crypto regulators. People people don't have confidence in the regulators, right? On one hand, we know they're hostile. On the other hand, there is no framework for registering a digital exchange, a digital security, a digital token, a digital commodity. So even though there's the thought that, well, we just got to register, there's no way to register. And so there is no framework. And then there's stress and there's tension between the regulators. Between the SEC, the CFTC, there's tension between the Department of Justice. There's tension between various regulators in different countries. Big question mark. It's like when your parents are fighting. right? It's like, how do the kids have anxiety, they got to go to counseling. And then 11, there's a crisis of confidence in the crypto lawmakers, the policymakers, right? There was a move to put forward legislation last year, like the Bozeman-Stabenow bill, and it just kind of imploded. And so crypto lobbyists, crypto lawmakers are all in disarray. That is the micro crisis of confidence in the crypto industry, and that's been playing out over 12 months. Now, that we all know that story, but I felt it was important to lay that out because the thing that's enveloping it right now is a mainstream crisis of confidence. And I think you could trace it. You could say the early sparks were last year. Late last year, the Bank of Japan lost the peg of 25 basis points on the 10-year Treasury in Japan, and it floated up to 50 basis points, and that was that was a spark. And then we saw the 30, 40, 50-year long dated bond in the UK. They spiked up 100 basis points or more. Big UK bond meltdown, I guess, in Q4. And the result was the Chancellor of the Exchequer lasted a few days. The Prime Minister and the entire government fell a few days later. And so people were scratching their heads, but that was distant. That wasn't us. That was just on the island of Britain. And so the question is, why would an entire government topple? The prime minister, the government, and the head of the treasury all topple so quickly? And people couldn't quite get their hands around it. But the answer is, when you jack the interest rates up 150 basis points, the bond portfolios with a duration, if you have a bond portfolio with a duration of 20, which is like a 30-year bond, a 100 basis point move causes the bond to be trading down 20%. And so if you have a long duration bond portfolio, 10 to 20, then you're talking about crushing 10 to 20% or more of these bond assets. And that rendered every bank and all the pension funds insolvent, theoretically on paper. And so that just couldn't stand, because they realized they're going to melt down the entire British economy. So we saw that happen last year. That was the warning shot. Well, then Silvergate failed. And it's, when a bank fails, if you can just blame the executive team or scapegoat, or say it's a one-off, it's because of incompetence of management, or they were in the wrong business, then you can look the other way, and there's no mass scare. But of course, after Silvergate failed, then Silicon Valley Bank, started to fail, and that created a bigger crisis. And that was sensitized, and I think it radicalized, if not engaged, all of the Silicon Valley tech VC community, and we saw them get very loud on Twitter. That actually escalated this thing, and then the shutdown of Silvergate, it accelerated the loss of confidence in the regulators, and it sort of says, it says that there's uncertainty here across the board, and it injected a slight dose of fear. I think the three in the hit parade of mainstream crisis of confidence is mid-sized banks, right? So the contagion spreads to mid-sized banks like FRC and the like, because they're all holding the same portfolios. And of course, at that point, people start asking the question, why are these banks in trouble? And so we actually see a crisis of confidence in bank accounting, because the reason they're in trouble is because they're not marking to market their assets. If they're marking their assets to market, they all would have had to take every time the Fed raises interest rates 25 basis points, you're going to have a $50 billion write-off by the banks. And by the time you raise interest rates 300 or 400 basis points, you would have a $10 trillion, multi-trillion dollar write-off of banks. But because they've got the ability to hold these assets to maturity, they're not writing them out. So now we think, well, we don't really trust the banks, but we also don't trust the accounting. And then Credit Suisse catches fire. And then we think, well, that's a small thing. And then the Swiss National Bank's going to bail them out for $50 billion. Okay, well, you would think that a $50 billion bailout from the National Bank of Switzerland puts that thing to rest, but it doesn't, which makes you think, oh, more than $50 billion got withdrawn from that bank. Now they have to merge it with UBS. Now UBS is afraid to buy it. They want government guarantees. Now the Swiss National Bank has to put up 100 billion in Swiss francs. Oops, if this is that big in Switzerland, if you got a problem of $100 billion in Switzerland, you got to multiply that by at least 10, right? So now it starts to look like $1 trillion problem. Then you get expressions of confidence from the central bankers. So the sixth challenge is the Fed, the EU, the Bank of England, the Bank of Japan, and the Swiss National Bank all agree to swap lines. But what does that mean, right? What that means is that, in essence, the Federal Reserve is going to be sending hundreds of billions and likely trillions of dollars to the other central banks in currency, swapping it for, either posted treasury collateral or maybe even for currencies. And that's an opaque thing. So now you start to see this thing becoming systemic. And of course, that spreads to a crisis of confidence in mortgage-backed securities and agency mortgage bonds. I mean, that's the headline this morning, $8 trillion of them. Right? I mean, obviously, if they're yielding 1.8% interest for the next year and the risk-free rate is 450 basis points, then you would have to be crazy to want to own them. So now 8, and the mainstream crisis of confidence hit parade is we have a crisis of confidence in sovereign debt, right? In essence, it's a credit bubble. We've got $100 trillion of debt out there, and I don't know what it is, 30, 40, 50 trillion dollars of US sovereign debt, and it's all held to maturity, not marked to market. When you mark it all to market, it's going to be a $10 trillion disappearance. So this is a conundrum, right? Because the central banks, they decide there's too much inflation, so they got to take the interest rates up. And the way that when they take the interest rates up, if they could take the interest rates up without actually marking down the portfolio of bonds, it's like having your cake and eating it too. But but the way you're contracting the money from the system is you're taking $100 trillion worth of bonds and marking them down to $85 trillion. And there's $15 trillion taken out of the system. But if we pretend it wasn't taken out of the system, then all the banks are solvent. But as soon as they mark it to market, they're not solvent. So the accounting of hold these to maturity says I don't have to mark it to market, but that doesn't work if there's a run on the bank and people just start to withdraw their deposits. So what you have in essence in rapid succession is a crisis of confidence in mortgage debt and sovereign debt, and then just in the bond market in general. Right? How can you have confidence in any fixed income asset? And as I pointed out, that leads to a crisis of confidence in the bank accounting, and that leads to a crisis of confidence in central bank policy. Like maybe if the most important chart, Scott, I think, is the 5-year chart of the 1 month or 3 month T-bill rate. And if you look at that chart, then of course you realize that it kind of was 180 basis points, 6 years ago. They took it up to 250 basis points, broke things. Then they brought it back to 100 basis points in January of 2020. And then they crashed to 0 basis points or something like that in March of 2020. And then we were at 0 on the floor for about 18 months. And then we went into a steep climb from 0 to 475 or 500 basis points or the like over the next 12 months. And of course, what you're doing when you take it to 0 is you're inflating the credit bubble to infinity. And then when you're pulling back on the stick of the airplane and you're taking it from 0 to 500 basis points, you're ripping the wings off the airplane, which is the entire economy. So you can't fly a $500 trillion economy like some Red Bull sports aircraft, without, you're either going to black out, you're going to crash and burn, or you're going to rip the wings off of the plane and black out, and then you'll crash and burn. So there's a crisis of confidence there, but you just to add 12, 13, and 14 to this, there's political party dysfunction between the Republicans and the Democrats, right? Just dysfunctional, all of the I'm not going to go into what it is. You know what it is. It's, they don't get along. And then there's regulatory dysfunction. You have conflict between, the judge, the bankruptcy judge in the Voyager case, and the SEC and the Justice Department and, the CFTC. And there's just a lot of dysfunction there. And then there's a crisis of confidence in political leadership. So there you go. A mainstream crisis of confidence in a $500+ trillion economy, a micro crisis of confidence in the crypto economy. A year ago, all these things were kind of under the surface, and they've all kind of come to the surface in the last 12 months, and every one of them's been brutal. What's happened in the last 2 weeks? Massive Bitcoin rally. Why? Well, I think that if you just put all that into your synthesizer and you say, what do I trust? What am I willing to invest my money in? Where's my safe haven with all this anxiety? And the safe haven is simple. It's Bitcoin the asset, Bitcoin the network. Right, those two things are your safe haven. Bitcoin, the asset, is the safest currency, the safest investment asset I can find because it lacks counterparty risk, and because all of the 11 meltdowns I mentioned in the crypto market, all 11 of those catastrophes have not stopped Bitcoin from functioning. It has survived them all. And so I sense in the crypto community, Scott, a grudging respect growing over the past 12 months for Bitcoin. If you roll the clock back 12 months ago, there are a lot of people that just, the trolls said, oh, it's boomer coin. I'm not going to say who, but many people said it will be irrelevant in 5 years. It's the last thing. It's aged tech. And I think that what they realized is that when there's infinite money and the regulators are not active and the politicians aren't noticing you, then you can have a lot of fragile structures. We had a lot of fragile, overly complicated Rube Goldberg devices in the crypto industry, Terra Luna being the most famous example, that they kind of flew, and then as soon as there's pressure on them, you just realize they're unstable. They're too complicated. Maybe they're good ideas, but they're implemented in an unstable fashion or irresponsible fashion or non-compliant fashion. And when scrutiny comes to them, they're going to collapse. And all of the bankrupt entities, right? BlockFi was a good idea, but it was unstable. Celsius, unstable, right? All these things unstable. They all collapsed. But, in their defense, would be all fractional reserve banks, right? If you're collecting $100 billion in deposits that you have to deliver on 1 day notice back to the depositor or 1 hour notice, and if you're turning around and lending it out for 30 years and a fixed mortgage rate security, that was a bit fragile. And of course, if you bought bonds with it that had a 10 or 20-year duration, that was also unstable. So what we're seeing is a lot of overly complicated schemes to generate yield collapse under this kind of stress. So I think people realize maybe Bitcoin's not such a bad idea, like no yield and no counterparty risk. And, Satoshi's not around to embarrass us, right? I mean, there's a point to this, which is if there's an attack, if there's attack surface, whatever it is, whether it's a founding team, whether it's an entity, whether it's a corporation, whether it's a yield protocol, all these attack surfaces, if they can be attacked, they will be attacked. So I think that if the question is why is Bitcoin rallying, the answer is every other idea for investment seems like a pretty bad idea right now, Scott. And everybody that understands Bitcoin really well, that also had their money in altcoins or stable coins or other investment ideas, or if you're a crypto VC or you're a stable coin holder or you're a whatever, you're thinking, well, that is more risky than I thought it was, and it didn't work out as well as I thought it would. And so what do I know that I can run to in times of stress? It's Bitcoin. If if the stable coins, when BUSD is not available to me, and when Silvergate and Signature are not available to me, and I need to settle on the weekend, right? I'm driven from those stable coins into Tether, but then if I start to get worried about Tether, what am I going to do? I'm going to go back to old school, and old school was Bitcoin was the unit of account in the crypto economy, right? Tether and stablecoins made the U.S. dollar the unit of account in the crypto economy. But I think we see people reverting back to Bitcoin as unit of account. Bitcoin is the reserve asset of the crypto ecosystem. Bitcoin is the safe haven asset, and this is being pounded into people's heads. So some of the money is the crypto assets that are looking for the safe haven. And as you get anxiety about everywhere else, you kind of run to Bitcoin because Bitcoin's not going to screw you. Bitcoin doesn't have a management team to take advantage of you, and it doesn't matter who you are. Don't trust me. You shouldn't trust any politician or any business person anywhere in the world. You should trust a protocol. The one thing I'm reasonably sure of, is that the number 9 will be interpreted to mean 9 by billions of people in a year. And the word love and the word hate will be interpreted to be love and hate by a billion English speakers in a year. And 1 BTC equals 1 BTC, and I can run my node. So the protocols are actually, people got bored with Bitcoin and in the crypto world, and they started thinking it's boring. I missed the boat, and they stopped appreciating the beauty and the simplicity of a protocol. And now I think they're rediscovering it, and I think you see that with the crypto entrepreneurs. I think you see that with Cointelegraph. I think you see that with CoinDesk. I think you see that on the cover of Bloomberg Crypto. I think you see that in the mainstream media. There's a grudging respect and an acknowledgement that maybe Bitcoin is not such a bad idea. Maybe Bitcoin is not boomer coin. Maybe Bitcoin is a good idea. And so that's part of it. I think the other part of it is Bitcoin, the network. If I can't settle on these stablecoin networks, if I can't settle with the crypto exchanges, if I can't settle with Silvergate and Signature, and if I get my banking access cut off, then the one settlement network that I can trust is the Bitcoin settlement network. So the value of Bitcoin as a settlement network has been undervalued. People undervalue the idea that I can move $1 billion on Saturday from point A to point B without asking permission. And maybe you see how I just basically said that everybody that needs to give you permission seems to be hostile in a world where every single regulator and every bank, everything seems hostile. It's a hostile, dangerous world. You start thinking that maybe the ability to use the Bitcoin network is been undervalued. So I think that's rising to prominence. I think the third thing that's driving enthusiasm is Bitcoin applications. Just, like we saw ordinals and Taproot and the like. It's like, well, maybe I can build stuff on, maybe Bitcoin is a network that I can do DeFi on, I can do NFT on, I can do settlements on, I can build applications on. If I don't trust everything else, maybe I return back to this idea that Bitcoin has an application future. And then I think the fourth observation is the Lightning Network is really exploding all around us. I think there's an explosion in entrepreneurs. There's so many cool applications that are going on the Lightning Network. MicroStrategy is hosting a Lightning for Corporations conference. It'll be the first one in the history of the world. We're going to have thousands and thousands of global 5,000 companies and IT people, and they're looking at how do I build Lightning into my corporate apps. And I think that if you look at the subtext here is, if everybody's afraid of everything else, but I've shown you a way to move money over IP in a open, permissionless fashion that's ethically sound, that's that's economically sound, and that's technically sound, then again, I've invented money over IP. TCP/IP changed the world, voice over IP changed the world, money over IP will change the world. There's been this struggle about what is money over IP. Well, it's got to be an open, permissionless protocol. You can't own it. If Linus Torvalds had owned a 20% royalty on Linux, it wouldn't be Linux. Stephen Jobs declared war on Flash, and he elevated HTML, HTML5, and he elevated other open protocols because he understood that you can't assert proprietary ownership on this stuff. In fact, it was, I'm old enough to remember when DECnet, and Token Ring were the networking protocols, and they were owned by Digital and IBM, and they went to zero. And TCP/IP, which was thought to be, this technically complicated protocol that was too hard to use and not business friendly and the like, it destroyed everybody because it was open information. It was information on IP, and eventually voice over IP did the same thing. Initially, it was college girls talking to their boyfriends on Skype, and then it turned the world upside down. And I think money over IP is the same thing. So I think that would be my framing of everything going on right now. Bitcoin is an idea whose time has come. I don't think, by the way, Scott, I don't think that the Bitcoin rally is due to mainstream adoption of Bitcoin. I think the Bitcoin rally is due to crypto adoption of Bitcoin.
Agreed.
This is a catalytic event, Scott, that has rallied the entire crypto community behind Bitcoin because we were at war with each other a year ago. I mean, Sam Bankman-Fried and all of the other crypto ideas, of which there were probably 25 of them, they were frenemies and they could not agree. And I think that when FTX melted down, I think it was a come to Jesus moment for crypto people because they realized that we really have to put our differences aside and agree on one thing, which is Bitcoin is good, right? And if you want to boil this down, my view is Bitcoin is open, permissionless, digital commodity. Nobody controls it. Everybody has to pay their way into it. If I want to have Bitcoin, I put $4.2 billion of real cash into Bitcoin. And if I say the wrong thing, the maximalists shred me tomorrow. And I know that I don't have any control whatsoever over the protocol, even though I paid $4 billion to buy into it, because it's everybody's property. And so Bitcoin is this common thing we can all agree on and nobody owns. Everything else, they're all good ideas, Scott. Digital tokens, Tom Brady token, Katy Perry token, NFTs, they're good ideas. 24/7, 365 trading is a good idea. Being able to launch 100,000 securities 1,000,000 times cheaper than the 20th century way, it's a good idea. DeFi, a good idea. They're all good ideas, but they all have risk and complication to them. And for the most part, it's like companies with equities, and you need to build a company, build the equity, and fight the regulatory wars and the political wars. And so I'm not going to endorse any company, no matter how good an idea it is. I'm not going to, like Bitcoin miner. You're a Bitcoin miner, but is it a good idea? Maybe it is until the regulators shut it down in China. It's like they all have risk. And so I think when the crypto community says, hey, we have a lot of good ideas, but there is one great, insanely great idea that we all have to support. And that one insanely great idea is Bitcoin. And if we make Bitcoin the reserve asset of the crypto ecosystem, and if we focus on what made the Bitcoin network anti-fragile, then at least we've found our moral bearings, our economic bearings, and we found our technical bearings. And you can build a world based upon that foundation But if you run away from that foundation, you're building on a bed of sand, and everything is fragile, and it all crumbles under your feet. And
Totally
so
agree.
and so that's why Bitcoin is rallying right now. And we're still early days with regard to the mainstream community getting it. I'll make one more point and I'll shut up. My last point is we're still 0.1%, 0.2% of the mainstream finance world. And so everything going on in the crypto ecosystem and the Bitcoin world is really just a sideshow. What happens in the, this mainstream opera? The regulators, the politicians, they're going to fight and they're going to take lots of action to stabilize that. That's above my pay grade. We're not going to fix that. There's a lot of complicated stuff that's going to go on. What you can expect is this is just taking us from 0.1% to 0.2% to 0.4% to eventually 1%. And when Bitcoin is trading at 10x where it is right now, we're going to be like, like a 1%, and the main show is still going to be conventional banking. And so that's why I would say if you've got some energy in life, why do I have laser eyes? The laser eyes is save what you can save, fix what you can do, what you can do. We can make Bitcoin successful, and we can build an ethical, sound, rational set of applications and a framework around it. If we start from Bitcoin, trying to go fix the rest of the world is a fool's errand. We're not going to fix everything else. There's 100 other things that we could dwell on, but they're above our pay grade. And you want to fix that, you need $25 trillion to make a dent at that thing. And so that's not going to happen for the individual or anybody on this space.
Right. And I don't believe that it has to. I think that you're 100% accurate in your assessment that this is largely crypto native moving into Bitcoin. And you can see that obviously just by looking at a Bitcoin dominance chart, which is something that we've seen in previous cycles as well. I just want to circle back a bit to the banking. Obviously, the fiduciary responsibility. MicroStrategy owns billions of dollars worth of Bitcoin. You personally own Bitcoin. We've seen Elizabeth Warren. She was effectively dancing on the grave of Silvergate, causing, you could argue, this sort of screaming fire in a movie theater situation that led to the other collapses. That really did tip everyone off to this idea of Operation Choke Point. I don't necessarily have an opinion whether that is or is not happening, but how much concern do you have, even though Bitcoin is a 24/7 settlement layer, that at some point it will be very difficult to exit that and go back to fiat when necessary? Because I think everyone would agree that you still need on and off ramps. So how much of a concern is that?
Well, I think through all of this chaos and carnage, Bitcoin has been rising to prominence and is more institutionalized now than it was a year ago or 2 years ago. I think if you read all mainstream literature, there is universal agreement in the New York Times, the Wall Street Journal, Bloomberg, CNBC, from every regulator, every politician, everywhere in the world. There is universal agreement. Bitcoin is an asset that is going to continue, that has a meaningful place in the world. Like I think we have crossed the event horizon. So ironically, right, the shutdown of these banks, it's what they're doing is they are impairing the dollar settlement networks of the crypto exchanges, right? So if Genesis wanted to trade OTC with a crypto exchange on the weekend, right, then they either have to use stable coin, right? How do you do it, right? There's 4 layers. It used to be I trade with Bitcoin. And so then Tether comes along, so I trade with offshore stablecoin. And then Circle and Paxos come along, and I trade with quasi semi-regulated stablecoin. and then Signature and Silvergate come along, and I trade with fiat stable dollars, right? So these are all just settlement networks for high-speed crypto traders. So what happens if I shut down the fiat network? Well, then I roll to stablecoin Circle. What happens if I shut that down? I roll to Tether. What happens when people lose confidence in that? I roll to Bitcoin. So Scott, ultimately, this is just driving people to Bitcoin. And if Bitcoin is the settlement layer we can all trust, then why wouldn't I just sell all my stable coin? Like, let me give you an example. If I was sitting in a country in Asia or Africa and I had $1 million in stable coin, and I thought that whoever operated the stable coin could simply freeze my money and steal it from me, wouldn't I sell stable coin and buy Bitcoin?
Absolutely.
If I had $1 million in Celsius or $1 million in a neo crypto bank and I lost confidence, wouldn't I? What you do is you have a tower. I basically pull it out of the crypto bank and put it into stable coin. Then I move it to the most stable coin. Then I move it. If I can exit to a bank, I do. But people that are in the crypto ecosystem didn't get into the ecosystem because they believed that they could get rich or stay rich by buying dollars or pesos or yen or bolivar, right? So
Yeah.
ultimately, yeah, it's vexing. It's just another irritant and it's a nuisance. But this is a marketing event that's reminding everybody why they like Bitcoin. This is ironic. It's counterintuitive. But you know what bankrupts the gun companies? When the politician says we're going to make guns legal. You follow me?
Absolutely.
Like apparently every time the politicians say we're going to outlaw guns, when someone reads that you're not going to be able to buy guns in such and such state, sales go up by a factor of 10. And so in this particular case, the harder they attack the network, the more anti-fragile, the more it responds. So I don't think it made Bitcoin weaker. I think it made it stronger, right? Because there's a whole world of people in the crypto ecosystem. They don't have a choice, right? Like if you're in Lebanon or you're in Venezuela or you're in Argentina right now, and you lose confidence in a certain crypto exchange, you move to a stable coin. If you lose confidence in the stable coin, you just find the most stable, most reliable crypto asset, right? What else are you
Absolutely.
going to do, right? You're going to
Yeah. Anecdotally, I mean, last weekend I went on vacation. We saw the depegging of USDC, and I very quickly largely moved my USDC into Bitcoin. And I'm not in Venezuela, I'm not in Argentina, and I'm not in Lebanon.
Yeah, there's also this kind of dynamic, like if Bitcoin is boomer coin and nobody believes in it, then you're wanting to actually invest in something with a higher alpha, and so you're going into other crypto assets, or you're holding your money in a bank, for opportunity, right? Or the other thing is, right, I'm going to take my money and I'm going to put it into overnight T-bills that yield 450 basis points or 480 basis points. So the Fed sucked a lot of money out of everything, right? They sucked money out of every asset. What asset do you really want to hold if you can get 480 basis points risk-free overnight money, right? So that happened. But when they cut off that on-ramp, off-ramp, and you're staring at this, you're thinking everything just looks more risky. What we say over and over again in Bitcoin is if your time horizon is 10 years, it's not risky at all. It's the least risky thing in the world. The frustration is just is getting people to see that if you're willing to stomach some volatility, it's low risk. So I think what happened is a rotation where people all of a sudden realize maybe Bitcoin is actually got a much brighter future than we thought, and maybe it's more valuable than we understood. and maybe the thing that we thought was safe isn't safe no more. And all of the like all the places I had confidence in, I don't have confidence anymore. I just gave you, right, a list of, in essence, 11 crisis of confidences in the crypto world and another 14 mainstream. So you kind of got 25 areas of the world where people on the margin are less confident today than they were a year ago. And if you go to my Twitter, you find I ran a poll and I asked people after the Silicon Valley Bank bailout, are you more confident in the banking system today than you were before this all started, like a week ago? And in 1 week, people were 85% less confident. So as that confidence breaks down, people are going to want to run to safety. And honestly, Scott, if you ask me, so what's safe? I mean, the truth is, I can't, in good conscience, make a single recommendation to you other than I think Bitcoin, the asset, and Bitcoin, the protocol, are both safe. By the way, I'm not telling you that launching an application company on Bitcoin or launching a Lightning application on Bitcoin is safe. You could screw it up and blow it up and not make money. All I'm saying to you is I feel pretty confident in TCP/IP. I feel confident in voice over IP. I feel confident in the English language. I feel confident in base 10 math. And I feel confident in the Bitcoin protocol as the monetary protocol that's emerging, because I mean we spent 10,000 hours looking for everything else, and the world is beat on everything else, and there's infinite money chasing after anything else, and nobody can find anything better. So all I got for you is Bitcoin, Bitcoin, Bitcoin. And that's what I would say to everybody. I've been saying it, but a year ago, you didn't have these 25 meltdowns. Today, I think the difference is a lot of people have had their feathers singed, or taken a beating by taking more risk. And now, let's take Balaji. I mean, there are people that are actually, they've had their come to Jesus moment. And when your bank seizes all your money and freezes it, that's a pretty big come to Jesus moment. So I think a lot of people are realizing this today, and they didn't a year ago.
I agree, and we're actually trying to add Balaji to the conversation, just so everyone knows we're having a major issue with Twitter Spaces and unable to add or remove people at the moment, trying to get that sorted out. I want to go back to another point.
Scott,
yes,
Scott, I think
please.
if they request, we can add them. So if Balaji requests, we can add him. That's not a problem.
Okay, so we'll work on that in a bit. Thanks, Rand. Michael, I want to circle back to the idea of this great decoupling that we have here. A lot of people, I think, have been married to the idea that Bitcoin trades just like any other risk-on asset because that happened for a temporary period of time. There was a point, last year where the correlation had reached 0.8, but now it's sub 0.2 and has only dropped for almost 9 or 10 months. Do you think that we're done with that narrative, that we can start actually? I think that we were all done with that narrative long before. And when you zoom out to 10 years, that that's not a correlated asset. But do you think that we have enough here now for people to see the light and realize that this is not a correlated asset and that you don't have to view it in the same lens as a stock? Or is that how Wall Street's going to continue to approach this because it's familiar?
I think this is a catalytic crisis which has cemented the great decoupling. Yeah, I think this crisis did it. I think you're watching it over the past 2 weeks, and you need a crisis to change people's deeply held beliefs. And I think the crypto meltdown, it kind of put everybody in the crypto industry on edge, where they had to say, well, what do I believe? And I think that if I polled 100 people in the crypto industry today, do you think that Bitcoin is good for crypto and is a base foundation for crypto? They say yes. And I think that in the mainstream media, I think that people were ignoring Bitcoin as a bank, You know what I say? I've been saying, if you go to hope.com and you read it, it says Bitcoin is a bank in cyberspace, right? I mean, it, and we've been saying that for 2.5 years. Bitcoin is a bank in cyberspace run by incorruptible software, offering a global, affordable, simple, and secure savings account to billions of people that don't have the option or desire to run their own hedge fund. That was on the site 2.5 years ago. Everybody ignored it. And they said Bitcoin is a speculative asset. And what's happened here is people said, oh my God, banks are hedge funds. And they said, wait a minute, banks are hedge funds. My deposits are given away to a bank to gamble with. I want a different bank. Bitcoin is a bank. It's not a hedge fund. And the difference today is, again, if you go to my Twitter, you see I posted a video of Chamath on the All In podcast. And Chamath is basically saying, man, what I've realized is we really need a bank that'll just store our money and not lend it out, right? I mean, but we're going to have to do that in software. We need a different approach. What would that approach be? And of course, the obvious approach was written in 2008 by Satoshi in the white paper. It's just that the entire world is having a hard time embracing the idea of Bitcoin as a bank and the value of a non-sovereign monetary asset, which is orthogonal to the currencies of the world and is absolutely scarce. And so I think Scott, we rotate from the narrative of crypto is Bitcoin and Bitcoin is speculation to the narrative of what Bitcoin is actually a risk-off asset, and it's a bank in cyberspace run by incorruptible software, and it represents an alternative to the existing 20th century fractional banking system. And Scott, yeah, ironically, you know what causes the mainstream media to change the narrative? It's like, if the price runs up $10,000, you have to have an explanation for why. And so the price movement causes people to say, well, I can't explain it the way I explained it before, because if everybody's in fear and the price is going up, there must be a different explanation. So I think what's happened here is the mainstream has embraced the idea that maybe they misunderstood Bitcoin, and maybe it isn't just a batshit crazy speculative asset, but maybe it is actually a different approach to banking and a different approach to currency. And in a world where everybody in the world is simultaneously losing confidence in the banks and in their currencies, right? If you're not quick, you think, well, it's just the regional banks that are melting down. And if you're quicker, you think, well, the entire banking model is broken. And then what follows next is, wow, this is not a $25 billion bailout. It went from 25 billion to $1 trillion in a hurry, but now we're staring at numbers that look like 10 trillion. And so at this point, a rational macro person, and I'm not saying they're all going to get it this fast, but a rational person says the entire banking model is broken, and then the entire fiat currency system is broken, and there's going to be a massive wave of money printing, and that means I need to have my wealth denominated in an asset which is not a currency derivative of the dollar or the peso, the bolivar, or the euro. I need a non-currency derivative, and I need to put my non-currency derivative in a bank without counterparty risk, which means maybe self-custody, or it just means I don't have to trust you, right? Somebody. And so I think it's big catalytic change, Scott. And we're still early. Like, I'm not sure everybody else would say what I just said, but the writing is on the wall here. And I think that Bitcoin is through the worst of the crisis. And at this point, we're poised for the next bull run. And it should be a much more pleasant bull run, because everybody, Scott, there is a special place in hell, in my mind, for people that loan out their Bitcoin and then borrow the Bitcoin and then sell the Bitcoin short so they can speculate and then lose the Bitcoin. right? And I'm not going to say who might have done that, but everybody that thought it was a bright idea to rehypothecate Bitcoin and sell it short or naked or lose it, they've all been bankrupted in the past 12 months. And so, given the fact that all of the players that were in the business of shorting Bitcoin or rehypothecating it got wiped out, and if you're holding Bitcoin after it got beat down 5 successive times from 66,000 to 16,000, I think you qualify as a true believer, right? And at 16,000, you know, all of us were ready to write it to fucking zero, right? And so I think that that this is a coming of age catalytic event for Bitcoin. I think we've gotten through the crisis, and now this has steeled the resolve of the maximalist. And I'll just give you one more very important framework here, which is there's 5 kinds of Bitcoin investors. There's the deniers, and they think it's just a tulip Ponzi scheme, tulip bulb, whatever, nothing. And they've been silenced because they've been made to look foolish. And then the second set of investors are the skeptics. They think it's too good to be true. The government will ban it. Like, and a lot of people are in that camp. But the government hasn't banned it. The government's embraced it, guys. Like, that's pretty obvious. That the chair of the SEC, let me lay this out. Jerome Powell, Christina Lagarde, Gary Gensler, Rostam Behnam, and Janet Yellen have all endorsed Bitcoin explicitly as a legitimate asset. So the skeptics are wrong, the deniers are fools, and now you're on to you've just got the traders, the technocrats, and the maximalists. The traders think it's just it's either an uncorrelated asset or a correlated asset, and they've been dominating it. And there's a lot more traders. There's always going to be traders, and they'll do whatever they're going to do. The technocrats think it's a digital monetary network, and it's money over IP. And the technocrats are the same people that would hold Apple stock or Google stock for decades, and you know they're hardcore. And there's an avalanche of them coming as soon as they start to see that Bitcoin is another approach to banking. Oh my, it's the digital transformation of banking. Well, and then the maximalist, and here, I have a much less controversial view of maximalist. If you believe that Bitcoin is an instrument of economic empowerment, if you think it's an ethical good thing for 8 billion people, you're a maximalist. It's just a monetary protocol that gives property rights to 8 billion people that cannot be seized. That's my definition of maximalist. And once you believe it's an instrument of economic empowerment, then of course you're going to do everything you can to spread it to 8 billion people and contribute to it, because it's ethically superior to just a good technical idea. I mean, I made a lot of money investing in Apple and Amazon and Google and Facebook, etc. But my point is, I didn't think they were going to free 8 billion people from slavery, right? I didn't think they were going to change the world. I just thought they made the world somewhat better, right? And ultimately, they're companies, and companies are corruptible because they have a management team and they're run by people. Bitcoin's a protocol, and so a protocol is what allows you to be a commodity, not a security. And I think what's happening here is the deniers are gone, right? There's a nail in their coffin. If you're a denier like a Peter Schiff, right, you have no credibility left. The skeptics have stopped barking loudly that Bitcoin's too good to be true and the government will ban it. The skeptics are also, they're out of the mainstream. There's no credibility for them. The traders were trading it as a risk asset, and they were shorting it in order to hedge their NASDAQ portfolio. But the traders just got destroyed, Scott. The traders that were short Bitcoin got wrecked, and the traders, the crypto traders are all out of business. They're all bankrupt. And the mainstream traders are looking at this thing saying, I'm going to short this at my own risk. And now you've just got technocrats, and then you've got maximalists. And we're 1% of the journey. And I think that, I think that the contribution of people like Balaji is to point out to the mainstream world. Balaji is going to get the attention of all the technocrats, and he's going to get the attention of a lot of other people that everybody's got to wake up and pay attention to this. Bitcoin is legit. This is real. And this is an instrument to change the world for the better. And so I applaud that. And I think we should all be trumpeting that message.
Could not agree more. I know you have to go in a few minutes, and I see Saifuddin has joined, which is incredible, and we'll have some more people joining. But Michael, I just wanted to ask you finally, and then I would like to go to him and get his opinion. We all agree that this move has been somewhat native to crypto. We discussed that before. How is this going to naturally jump the chasm with more bank failures, more contagion, or is there something that you believe that the maximalists and the crypto community, Bitcoin community in general, can do to help facilitate bringing the mainstream in now that we have their attention?
Look, I say Bitcoin is hope for Argentina. Bitcoin is hope for Nigeria. Bitcoin is hope for fill in the blank. If you're a family in Argentina, or if you're a company in Argentina, I can help you by giving you Bitcoin and helping you figure out how to onboard and custody. I can't solve the problems of Argentina. It's above my pay grade. So, and I would say the same is true with every nation state and every bank. I think the constructive thing right now is for everybody in the crypto community to come together, get behind Bitcoin, and then figure out how you enable onboarding, enable adoption, enable education, et cetera. Take every good idea that you had in the past 10 years, build it on Bitcoin. And, I would say there's 100 things in the world, that I don't care for, right? I'm not in favor of big government. And I just gave you 25 problems in the world. But I'm not here to solve the problems of the world. I think Satoshi taught us humility, and laser eyes imply humility. And the humility is change what you can change, do what you can do. And so there's only one thing that I think I can do, and I think we should focus on, which is how do we accelerate the adoption of Bitcoin? Because you're going to see all the politicians, all the regulators react to all these crises, and they're all going to do their job, and we're going to get bounced around, and every one of them is going to be a marketing event for Bitcoin. They're all going to catalyze Bitcoin. Hyperinflation in Argentina catalyzes Bitcoin, right? It's going to be 2 steps forward, 1 step backwards, right? Lots and lots of crises and sound and fury. But at the end of the day, you got to keep your wits about you, and you got to keep your eye on the prize, which is 8 billion people on the planet with Bitcoin, and how are you going to get that to them? And then everything else is like, I'm in favor of every Bitcoin related business, but you've got compliance issues, you've got energy issues. A Bitcoin miner struggles against an energy thing here. A Bitcoin bank struggles against that there. That's the struggle. The struggle is real. And I would say everybody in the world has 2 crosses to bear. You've got the Bitcoin cross, that's my unit of account. That's my standard. That is my ideology. That is my protocol. And I'm going to support that no matter what. And then you've got your business. You get up every day and you go to work to make money, hopefully to make money in fiat to buy Bitcoin. And when you're, I'm not on this call to tell you MicroStrategy software is the best and you should all go buy MicroStrategy software and sell Microsoft software now, even though I love MicroStrategy software. But the point is, that's a business, right? I mean, I'm not going to tell you where to eat. I'm not going to tell you what to do with your life. And you might screw it up, right? I mean, that being the case, you just got to understand that 8 billion people and 100 million companies are going about their business in different nation states under different rules. And that's an ugly, difficult, challenging situation. And I wish you all the best of luck, right? But I think that we can all agree Bitcoin is an instrument of economic empowerment. And if we just keep coming back to that, then we'll at least be half right in everything we do.
Absolutely agree. Seyfuddin, if you're there, I would love your answer as well. And Michael, I want to be respectful of your time. Obviously, welcome to stick around and continue, but I do know that you have.
I want to hear everybody
go.
else talk anyway. I apologize
Please.
for hogging the
floor.
No,
that was the plan. Thank you so much.
We have,
Seyfuddin, please.
Thanks.
Cool. Thanks, guys, for having me on. Yeah, I just enjoyed listening to Michael. Great to hear you as always, Michael. And I agree. I think it's I think what we see with people like Balaji and people like Chamath and a lot of the Silicon Valley people who have been around, who have seemingly been around Bitcoin for a while, and you would expect them to get Bitcoin. I'm going to go ahead and say that Balaji really only got Bitcoin last week. This is it. Like, it took Silicon Valley Bank to happen for Balaji to finally get Bitcoin was. And if you actually look at what Balaji had been doing before with Bitcoin, I would say, all of the shitcoining and all of the crypto kitties and all of the, all the many ventures that he'd gone through, all the shitcoins launched on Coinbase that he'd promoted and helped, all of the pre-mines, all of those things, I would suggest basically he had not gotten Bitcoin. He thought of Bitcoin as just some cool software. And I think it takes a crisis to sharpen and focus the mind. And when all of this world of startups, all of these Silicon Valley amazing startups that had, had a lot of money and a lot of funding and were doing well, and then suddenly, you banked with a fractional reserve banking, and that means there's a chance that this all goes poof someday. And indeed, it did go poof. And that really, I think, drove the point home that, oh, wow, okay, there is no safe haven. There is no money. The phrase money in the bank may as well mean lottery ticket, because you could just wake up one day and your bank is gone. I think this is really, really powerful advertisement for Bitcoin's value prop. And it's something that up until a few weeks ago, basically it's one of those things that you had to be a weird fundamentalist maxi to care about this. Like, why are all these maxis out there trying to tell people in the US that they need Bitcoin? They don't. All right, maybe people in Lebanon and Argentina need Bitcoin because their banks don't work. But here in the US, we've got all these amazing banks. Well, that seems now people understand why they're not so amazing. In fact, the only reason that they've lasted so long, that they've gotten the facade of being reliable, is the fact that the U.S. has the global reserve currency, which means the reason that Silicon Valley Bank was propped up until last week and from last week, the reason it has existed and the reason it existed after the crisis is because the U.S. basically exports the inflation needed to keep up these Ponzi's that are the U.S. banking system. It exports it to the rest of the world. All of the world holds dollars and treasuries, and all of that gets devalued every time these banks are involved with low interest rates. So I think I'm very delighted to see this begin to get through to people. Like, this is different from CryptoKitties. And I think I disagree with Balaji on the idea that we're going to get $1 million per Bitcoin within 3 months.